Hey Dividend Dojo fam, Ava here, and today, I've got a topic that might sound a little alarming. We've all heard the whispers, seen the headlines. Is the US dollar really dying? Is our hard-earned money actually losing its purchasing power faster than we realize? And more importantly, if these concerns are real, how do we protect our hard-earned investments and even profit from it? Today, I'm going to break down the concerns surrounding the US dollar's long-term strength, tell you precisely why this matters immensely to your investment portfolio, and reveal exactly what I'm personally investing in right now to fortify my wealth and potentially grow it, no matter what happens to the dollar. This isn't about fear-mongering. It's about being prepared, proactive, and powerful. Stick around, because understanding this could be one of the most crucial steps you take for your financial future. Let's talk about the giant question mark hanging over our heads, the US dollar. For nearly a century, it's proudly stood as the world's primary reserve currency, the undisputed king in global trade and finance. But lately, I've noticed a significant uptick in discussions, articles, and even mainstream media attention about its potential future. We're talking about some pretty serious factors here: massive and ever-growing national debt that's reaching astronomical levels, persistent inflation that's silently eroding our purchasing power with every passing day, and the global push towards digital currencies like CBDCs or even other major economies actively seeking alternatives to the dollar for international trade. Some leading financial experts and economists are openly discussing the possibility of a major paradigm shift, a rebalancing of global financial power. What this potential weakening or dethroning of the dollar means for your personal savings, your retirement funds, and every dollar-denominated investment you hold is absolutely crucial. It's not about succumbing to panic. It's about intelligent foresight and strategic preparation for what might be coming. Why should you, the everyday investor, be concerned about the dollar's stability, and how does it directly impact your portfolio? Many traditional investments, like simple savings accounts, fixed deposits, or even some government bonds, are inherently tied to the dollar's value. If the dollar experiences a significant devaluation or persistent high inflation, the returns you see on paper might not even keep up with the actual loss in purchasing power. Essentially, you could be making money in terms of numbers, but losing real wealth and future buying capacity. This silent erosion is a major threat to anyone planning for retirement or long-term financial security. But here's the crucial pivot, the dojo lesson. Instead of panicking or burying our heads in the sand, I believe this presents a profound opportunity to think differently and strategically about where and how we invest. The goal isn't just to make money in dollars, but to make money regardless of what the dollar's future holds. This calls for assets that inherently act as a hedge against inflation, assets that can hold their value, or even appreciate during times of currency instability. What exactly am I doing? What are my personal strategies to protect my wealth and potentially profit in this evolving economic landscape? I'm actively focusing on a few key areas to build a diversified and robust portfolio. 1. Precious commodities. Gold and silver. Historically, gold and silver have served as the ultimate safe havens during times of economic uncertainty, high inflation, and currency devaluation. They are tangible assets, physical wealth that are not tied to any single government's fiat currency. I consider a measured, strategic allocation to physical precious metals or reputable gold or silver ETFs. This acts as an insurance policy for your portfolio, a way to preserve purchasing power when traditional currencies falter. It's about owning something real and timeless. 2. Strong global dividend stocks. Specific examples and rationale. I'm doubling down on globally diversified dividend-paying companies with incredibly strong balance sheets, vast international revenue streams, and essential products or services. Think multinational giants like Nestle, Nergy, or ASML or Unilever UL. These companies generate revenue and profits in multiple currencies worldwide, making their earnings less dependent on the sole strength of the US dollar. Plus, They pay me consistent, often growing, dividends, which is my ultimate passive income goal. These are companies that truly transcend borders and economic cycles. 3. Real assets income generating real estate REITs. Real estate, when carefully chosen and strategically managed, has long been considered an excellent inflation hedge. Property values and rental income tend to naturally rise in inflationary environments, providing a built-in protection against currency depreciation. For accessibility and diversification, I primarily look at REITs real estate investment trusts. These allow you to invest in income-generating real estate portfolios like apartments, warehouses, or data centers without the hassle of direct property ownership. It's like getting a piece of the property market's protection with regular dividend-like payouts. 4. Strategic exposure to robust cryptocurrencies. Bitcoin, Ethereum. Now, this is definitely a more volatile and higher risk area, so please listen carefully. However, I believe a small, strategic, and disciplined exposure to established, decentralized cryptocurrencies like Bitcoin or Ethereum can act as a speculative hedge. They operate entirely outside traditional banking and government-controlled financial systems and are not directly tied to the value of the US dollar. Remember, this is higher risk, so it should represent a very small percentage of your overall portfolio, and only if you thoroughly understand the technology and the inherent volatility involved. Do your immense homework here. Before you rush out and buy anything, remember, always do your own research. My picks are based on my strategy, but your situation is unique. Always, always, always do your own homework. Never put all your eggs in one basket, especially in uncertain times. For personalized advice, always talk to a qualified financial advisor. Keep learning and adapting. The financial world is always changing. While the idea of the US dollar changing might seem daunting, I believe it's actually an incredible opportunity to become a smarter, more resilient investor. By understanding these potential shifts and proactively adapting our investment strategies, we can not only protect our wealth, but also strategically position ourselves for significant future gains, regardless of what the broader economy does. Now, I want to hear from you. What are your thoughts on the dollar's future? And what assets are you investing in to prepare? Let me know in the comments below. And most importantly, tell me what topic you want me to cover next. Your questions drive this dojo. If you found this video informative and helpful, please give it a big thumbs up, share it with anyone worried about their money, and don't forget to subscribe to Dividend Dojo for more actionable financial insights and training. Hit that notification bell so you never miss a lesson. I'll see you in the next video, ready to build more financial strength. Happy investing!